The defense space, if you look at from the 52-week highs or from the recent highs, they have been coming down very sharply. In fact, analysts are also not that bullish. Most of them have a target price which is nearly 50-60% lower than the current market price. So what is it that is happening in the shipbuilding space? Why there is a concern? Why we are seeing such kind of a sharp fall in the share prices? Why analysts continue to remain bearish on these companies? We have Varun joining us to give us all those details.
Rally in PSU stocks likes of defense, shipyard and railway. But of late we have seen some of these stocks falling from the highs. Some say it's profit booking, but other than profit booking, if you look the results of this, many of the companies were weak when compared to estimate. When I was speaking to some of the analysts, they were saying that there are execution challenge which may come in near future, and because of this, many brokerage houses have now started downgrading some of the PSU stocks. If you look at after results, IRCTC has seen a sharp price target cut with the lowest target of 540. Even for Mazga Dog, some of the analysts are saying that FY26 we would see a peak EPS, and after that you might see the EPS falling down. If you look from 52-week high, some of the stocks like Garden Reach, Cochin Shipyard, Mazga Dog, they have fallen around 27 to 37%, and some of the smaller stocks like MTAR Tech, they have fallen 40% from the 50-week high. Apollo Micro, Idea Forge, these are some of the stocks which have shown a great fall. Apart from defense, if you look at railway stocks like Jupiter Wagon, Titagarh, RVNL, Rights, IRCTC, they have all fallen from around 20 to 27% from their 50-week high. Some of the NFOs which have come off late, like Motilal Oswal, Nifty India Defence, HDFC Defence Fund, even they have started falling. A 3 to 5% decline they have shown in last 1 month. When compared to Nifty and small cap, mid cap index, if you see, these stocks have actually started underperforming, because in last 1 month, if you look at mid cap and small cap index, we have seen a rally from around 2.5 to around 4% around. Results was one of the reason. Other than result, if you look at valuation, the valuations have risen when compared to past 2 years average PE. Look at HL, 38 times is the FY26 PE. Last 2 years average, if you look, it is around 26%. Look at Cochin Shipyard, it is trading at around 54 times FY26 PE, but when you compare it with 2 years average, it was around 21 times. Likewise, BML, BL, RVNL, Rights, these are some of the stocks where valuations actually look very stretched, and this is also one of the reasons why we are seeing all these PSU stocks, especially defense, railways and shipping stocks, taking a beat.
All right, Varun, thank you so much for highlighting what's happening with the whole PSU pack. But indeed, the PSU rally has taken a breather, with many defense and railway names down about 20 to 30% from their peak, like Varun was just highlighting. But does this mean that these stocks have hit their peak, or is it just a correction? Let's listen into what market experts have to say on this.
Defense, railways, I mean, it's a story which has played out far too fast, far too soon. And there's too much of money that has chased too few stocks in this space, and everything is beyond comfort levels in terms of valuation. So the macro theme out here is pretty decent, but I think it probably, the stock prices are discounting next 3, 4, 5 years of earnings, which to my mind is a bit too early.
I think defense is very expensive. The margins are high. The market caps look very high versus global comparables. So we're not there in defense too much. Even on energy, downstream and midstream, we're not there because there is too much capex happening in those companies. And generally, PSUs, when they do large capex, the profits don't grow too much.
You have a risk on the PSU, as always. You see the OMC stock, highest riskiest. I think that's the real gamble. If you ask me, if you need to gamble, don't worry about option. You got to gamble and say which trend is what's going to happen to the OMC next quarter. I think PSU stocks, to by and large, is going to have a bigger problem. And number two is the chemical stocks. Overpriced to a point which I don't understand how they're priced in terms of PE multiple and the growth. So two sectors very clearly.
On the PSU side, if you look at it, there I would say the power sector, for example, the utilities, okay, where I mean, especially in the power side, power generation and power transmission and distribution side, there has been clearly an uptick in terms of revision in the targets, right? What has been said earlier. So that clearly opens up a better growth opportunity in that sector over the next 5-year time frame. And while the valuations are on the higher side, but in compared to the historical average, but absolute terms, they are still reasonably okay to really look at that sector.
One of the reasons why at least we stay away from is that it's not full deregulation and it's going to be sensitive, politically sensitive subject. And it's fine, in a country like India, if government wants to have a couple of PSUs for handling the inflation, it's totally fine. And we don't have to invest into them. But in general, government is trying to put a lot more investments into the exploration and building capacities of the refining, given our energy needs are going up. Also, some of the PSUs are also investing significantly in the renewable capacity, also which is serving the overall purpose of the government as well as the country. So I think they're all in the right direction.
All right, so that's the take coming in on the defense and the railway pack from the who's of the markets. What we are seeing, if we take the consensus view, then they do feel some discomfort when it comes to the valuation and the kind of run-up that we have seen in all these stocks. But select players do believe that these stocks can find some buyers at the lower levels, because in the long run, there are many factors that are at play for the transformation of these select sectors. So that's the view coming in on defense and the railway pack. But with this, viewers, let's move on onto the Buy Now Sell Now show, and let's start taking all your stock related queries. You can also write to us on the queries related to the defense and the railway pack as well, and we'll try to take it from our experts. But to connect with us, you can write to us on a WhatsApp number that is flashing on your screen and will be flashing throughout the show on the top of the screen, and you can also connect with us on our social media pages. But with this, let's...
If you like this video, then like, share and subscribe to ET Now.